Hi, and welcome to the Stock Scores Market Minutes for March 19th, 2018. This week, I want to talk about optimism, pessimism, fear, and greed. Now, optimism and fear represent buying opportunities. Pessimism and greed are selling opportunities, and it's important to understand the difference between pessimism and fear, which are often confused as the same thing, and optimism and greed, which are often confused as the same thing. It's all about the trend line on whatever chart you are looking at. So let's take a look at the 1 month chart of the S&P 500. This is a 30-minute chart, and I'm going to draw some lines on here. Fear is, well, let's start with pessimism actually. Pessimism is any time you have falling tops on the chart. So we can highlight a number of periods of pessimism on this chart, even over here. Greed is anytime there are rising bottoms on the chart. And so we also have a number of periods when there was optimism. So pessimism, falling tops, optimism, rising bottoms. Now the difference between fear and pessimism is in the intensity of the downward move. Here you can see that we went parabolic to the downside. There was fear where I just drew that circle. Here again, we went parabolic to the downside and we had fear right here. Optimism is when there's rising bottoms, and greed is when trend runs away or price runs away from the trend. So here you have greed as we are far above a trend line. We come back to it. This is simply optimism. We are running along with the trend line. Here we've got a little bit of greed because we are running away from the trend line. Not severely so, but still we have to recognize that there is emotion when price runs away from the trend line. So here we've got some emotion. Here we've got some emotion. You can see that almost every time we eventually come back to the trend line. And ultimately, you want to look for breaks of trend. So right here is when we switch from optimism to pessimism, because we are moving from a situation where there are rising bottoms to now falling tops. So remember, when you're in a downward trend, you should be short selling stocks. But when you get into fear, where price really runs away from the trend, expect that the market's going to bounce back. And so it's actually dangerous to short sell stocks. You want to think about buying stocks for the bounce back up to the trend line. And you can say the exact opposite for upward trends. All right, let's get into this week's market analysis. That, of course, was the short-term chart of the S&P, and we've had some short-term pessimism. Let's call that a neutral chart because it's generally moving sideways. So on the long-term chart, we have optimism. Talked about that many times over the last couple of years, really. We're in that upward trend. We ran away with greed, and we came back to the trend line, taking out the greed, and now we are back to optimism. Anytime you run away from the trend line, like here or like here, you eventually come back to it, and that is when the greed is being taken out of the market and back to optimism. That's the time to buy. On the Russell 2000, we are also in a long-term upward trend. This one's a little bit more of a linear, nice upward sloping channel. We haven't really had greed in this market. I mean, we had a little bit back there. For the most part, we're just kind of bouncing along inside this channel, and we're getting toward the top of the channel now, but still not at it. So this remains a good optimistic chart, not too overbought yet, but getting there. Onto the Toronto Stock Exchange, and we've had a little bit of a bounce back over the last couple of weeks, but generally the trend is been sideways. You can see that we've had a little bit of an upward move the last little while. Coming into some resistance there could provide a little bit of a stall in that recovery, but generally speaking, a neutral market in that time frame. Long term, similar situation. We've got pretty much a sideways trading range. We're not trending. The trend was in place. There was that trend. Then there was this trend. Both were broken. And so we're really lacking the buyer enthusiasm in the Canadian market right now. On to the TSX Venture, which showed a little bit of life on Friday. Not much, but perhaps it will be able to break this downward trend line, which we're still below, but something to keep an eye on next week. We could see this group come alive again. They've been pretty quiet for the last couple of months. And on to Treasuries. Well, this is an important chart because, of course, this tells us where interest rates are going. And we had good support there, hit it once, hit it twice, hit it 3 times, and now bouncing. It hasn't really broken the downward trend line yet. So I wouldn't get too optimistic that interest rates are going down, but there is that show of at least a little bit of buyer interest as of last week. So let's watch and see if we can break this to the upside. And if it does, perhaps we'll move back up toward resistance and see a little bit of a drawdown in interest rates near term. On to the US dollar, which is still in a pessimistic trend. And it is not particularly fearful because we have come back to the downward trend line. Here we had fear in the US dollar. Here we had fear in the US dollar. Why? Because it had run away to the downside from the trend line. Gold, stuck in a very narrow trading range in the last little while. I've been drawing this long-term optimistic ascending triangle pattern, but very low volatility right here at the tip of the triangle. That's what we expect. Now, what is the break going to be? Most likely, it will be a break to the upside. Why? Because there are rising bottoms on this chart, which is optimism. And that is usually what comes before an upside breakout. So hasn't happened yet. I wouldn't say get bullish about gold yet, but it's definitely starting to look better. And on oil, this is a daily chart. Normally I would show the weekly chart, but I wanted to show the daily because we're in this nice upward trend. And on Friday, we had a little breakout from this pennant pattern. And that's actually a bullish signal for oil, likely to continue the upward trend in the near term. So let's keep an eye on that next week. We could see some recovery in the oil sector, which has been pretty quiet lately. And onto the fear chart, the VXX, which is building pessimism, a descending triangle. Let's watch for a breakdown through the floor price there. And if that happens, then fear is going to come out of the market. Stability is going to come to stocks with less volatility in the stock market than we've had recently. All right, so my ratings then: US stocks bullish, long-term neutral, short-term. Canadian stocks neutral on both time frames. Gold neutral on both time frames. I've upped my rating for the short-term outlook for oil, which is now bullish from neutral, but still neutral long-term. Stock market volatility is coming down, but it is still higher than at the start of the year. The bullish trend for US stocks has been defended by the buyers. They've held that upward trend line, but they also haven't shown much motivation just yet. Gold is range bound. We got to wait for the breakout there. Oil has made a short-term break on that daily chart that could start a resumption of the trend. And as I said, fear is falling. All right, let's look at the trade of the week. And this is one of the biggest RR trades that I've seen in some time. Now, I utilized my worm strategy, which looks for action candles. Action candles are something that I teach in my active trader course. And that is the little pink dot on the chart. Now, at the opening of trade on Friday, AMTX actually made an action candle there too. However, it didn't have quite the liquidity that I like to see. It only traded 76 times on that opening candle. I like to see more liquidity than that. And so it was at this candle right there, which was the second action candle of the day, that it triggered my entry algorithm and the stock went for quite a rip. Now, to be honest, it would be hard to ride it out that high. It went up to 31 RR. But with this pullback here, I wouldn't fault anyone, myself included, for jumping out of it at that point. It actually ended up finishing the day more or less where this pullback was. So if you held until the close, you got the same as if you used a trail by 1 RR unit as your stop. Of course, those are concepts that I teach in the Stock Scores Active Trader course. You can look on the Stock Scores website for more information about that. All right, well, that has been the Market Minutes for March 19th, 2018. Subscribe to the channel, hit the like button, and you might want to hit that alarm button too. You'll get instant email updates when I have uploaded a new video. Have a great week in the market and trade well.